We've all been there. Taking stuff to Goodwill, they ask, do you want a receipt for the goods that you're dropping off? And you're probably thinking, hey, awesome, I can write off the fair market value, I can write off the cost of all of these old clothes and random household stuff that I'm leaving at Goodwill. It's gonna save me so much on taxes. Truth is, a lot of people get this one wrong because there are a lot more rules around writing off, itemizing deductions to Goodwill or Salvation Army or wherever you're donating these non-cash goods than most people know about. So I want to walk through a couple of the things you should probably know if you are actually going to try to itemize those deductions. The first is if you are donating household goods or used clothing and the total amount given is below $250, then that's all you need is the receipt that they gave. It's pretty straightforward. Once it's above $250, and especially once it gets above $500, that's where things get a little bit more complicated. So if you're donating more than $250 worth of goods, then what you're going to need a CWA issued from the organization. That's a contemporaneous written acknowledgement. And that's just going to say, not only do you have the receipt, but this is the official statement saying what you gave, exactly a great description of what it is, just going to be all that information coming from the receiving organization. That's for anything from $250 to $500 in donations. Now, getting above $500 is where it gets a little bit trickier. Now, let's be real, most people aren't giving more than $500 worth of clothing to Goodwill. But if you are, then you're going to need to have a qualified appraisal. If you're saying that, if you're trying to take a $550 deduction because you gave an Armani suit to Goodwill, the IRS isn't going to take your word that it's worth $550. Once it goes above that amount, once it goes above $500, that's when you need an actual appraisal to substantiate or to justify that deduction. I'm not going to get too much into the appraisal process, but I'll just say that when it comes to used clothing, most of the clothing is not going to be worth what you think it is. Maybe if you have Abraham Lincoln's top hat, that's technically used clothing, I guess, and it's going to have substantial value. But beyond that, your used pants, no one really cares about. So the actual deduction is going to be fairly low. But just remember, below $250, all you need is a receipt. $250 to $500, you need a CWA, and above $500, you're going to need the actual appraisal. On top of that, you're also going to need a Form 8283, which you can get from the IRS. So if you have any questions, drop them in the comments and enjoy dropping yourself off at Goodwill.